All right, hello everyone. Hope you had a nice week. Hope you have a nice weekend. I'm kind of pretty excited for the weekend because we got some good football on. At least it gives me something to do. Um, I don't really care who wins. I think I'm going to root for the Bengals, and I'm definitely rooting against the Giants. I'm going to root for the Eagles. Um, but yeah, I just want to see Kansas City lose, and I want to see the Giants lose. Other than that, I don't really care what happens. But anyway, I just want to go over some of the big stocks for the week. And these aren't necessarily trading recommendations, but I just think it's a good opportunity to learn. Now, I'm someone who's in a good place to teach because I was an institutional trader for 20 years, and I've done everything from being a market maker to mutual fund trader to hedge fund trader. And I just want to tell you that in the real institutional world, people aren't too caught up with like these crazy shenanigans like GAN theory and everyone's got a perfect system and so forth and so on. The best traders focus on what's the important price levels, what's the momentum. They let the market tell them what to do. They have an agnostic attitude and they come in without a preconceived notion, and it's very hard to do, but that's why they're good, right? You can't get married to an idea. If you start thinking to yourself, oh, the market's going up, the market's going up, market's going down, the market's going to go down, you know what's going to happen? You're going to get confirmation bias and you're going to ignore things that are contrary to what you think. Anyway, let me just go through this here because I know it's a Friday night and you guys probably want, or you students want to go do other things. But just notice here on Apple, we had this important support level here. Now it's become resistance. I mean, it looks like it may be breaking through, but it's an important level. It's going to take a while to know. It's going to, in months. I mean, like a week or two, or not even a couple of days or a week. But levels that were support become resistance because there's buyer's remorse. There are investors who bought here who regret doing so when the market goes lower. They tell themselves, "I made a mistake, but if I can get out at break even, I will." So they place their sell orders right where they bought their shares. And if there's enough of these sell orders at their former buying price, the level that was support converts into resistance. This looks like a fairly decent move, though. Pretty powerful, but we'll have to see. We might have a little bit of upside, but I suspect that it'll fade out over the next few days. Tesla here gives a good lesson of what we call market memory. Okay, resistance becomes support because of sellers' remorse. People sold, they regret doing so once the market moves higher. They tell themselves they're going to buy their shares back, but they don't want to pay more than they sold them for. So they place their buy orders the same level they had their sell orders at. So resistance can become support if there's enough of these buy orders. Now let's fast forward here 2.5 years later. This is what we call market memory. Notice how this level has become support again. So over the last 2 weeks, Tesla's gone from around 110 to 130. Market memory. Some levels are more important than others. I'm gonna sound like drony and weird, so remember this. Some levels are more important than others. Resistance can become support. Support and resistance levels can stay intact for a long time. Here's a perfect example of it with Tesla. 2.5 years later, the stock found support at the same level. All right, here's Bed Bath and Beyond. And once again, let's talk about support. Okay, back in August, if you recall, there was all this talk about the gamma spread, the gamma hedging. The market makers were going to have to take it up by buying all the stocks. Market makers shorted options to people in the 80s, and they were going to have to go back and buy the stocks to hedge. Of course, the simple thing anyone missed, and I can speak on this with authority because I was a market maker, like you would just hedge it with the options. You don't actually need to go buy the shares. But anyway, regardless, forget all this about gamma squeezes and what you see in Discord and what you see on Wall Street Bets and what you see in Reddit or whatever. Where did the stock stall out? Oh, gee, at a resistance level. You don't need to be a brain surgeon to figure this out. You don't need to be a market guru. Resistance levels can stay intact. Despite all the noise and all that, my students that I talk to, I just said, don't worry about that. Just look at the former resistance level. And sure enough, that's what's happened. Now, look what's happened here. I guess there's some new nonsense or noise going on in some chat room somewhere, but where did the stock find resistance? The same level that was support. Now, this happens because of buyer's remorse, right? People bought here. They thought they were the kings when the stock went higher. A lot of them assumed to not sell, or I'm assuming they didn't sell. When the price falls back below this level, a lot of them, all right, man, I made a mistake. I shouldn't have bought it. I want to get out, but I'm only going to do so if I can get out of break even. And what do? They place their sell orders at a level that was support. So buyer's remorse can turn support into resistance. Forget all this other complicated mumbo jumbo. Let the market tell you what to do. And if you come check out stockmarketjobber.com, and I assume you have because I think you're behind the paywall now, you'll realize the best traders just focus on the simple things. Okay, here's Amazon. And again, this isn't a recommendation, but I think it's a good illustration of this whole concept of market memory. This 8150 level was support back in 2019 and 2020. Now here we are 3 years later. Where did the stock find support? The same level that was support before. Here's a resistance level. I don't know what level this is. I think it's 103. A level that was resistance, 2 years later it becomes support. Okay, seller's remorse. The important thing to take away from this is that there's some price levels that are more important than others. Sometimes we know why, sometimes we don't. It doesn't matter. All you need to know is which levels are important. If you don't know where these important price levels are, you are not going to succeed as a trader. I don't care what style you have. I don't care what your personality is. There's plenty of styles that work as long as you match them to your personality. But you have to know where these important levels are. If you don't know where the important levels are, it's like you go into a town you've never been in, driving around, and you don't have GPS, you don't have a map, there's no one to ask. You're just going to be going blind or trading blind. But look at this. You don't need to be a market guru. This level was support, and years later it became support. This level was resistance, and years later it became support, and it's become resistance again. All right, so I think I just got one more chart here to follow up with, and then you can all go have a fun Friday night. Okay, here's NVIDIA, and this goes back a year. Now listen to this, all right, or watch this. Resistance became support. Support became resistance. Resistance became support. Support became resistance. Now here we are 6 months later. What are we doing? We're finding resistance at the same level. For some reason, the stock likes this 177 level. It was resistance again. It's important to know where these levels are because they help you place your orders. You can't just guess. You have to let the market tell you what to do. For example, say you bought NVIDIA down around 150 and you told yourself, oh, gee, if it gets to 180, I'm going to sell it. Well, guess what? You would have missed out because you didn't realize there was resistance at 177. If you're just saying, all right, I'm going to buy it. If it gets to 180, I'm going to sell it. You're just guessing. You're not letting the market tell you what to do. The successful traders let the market tell them what to do. And they see, oh, gee, 177 is the resistance. 180 is just guessing. I'm going to have my sell order around 177. Same thing if you're going down. You look for former support. All right, well, anyway, everybody, that's it. I don't want to spend too much of your time because a couple simple lessons could teach you how to make money. So please subscribe to our site or visit our site, stockmarketjobber.com, or on our YouTube page here. Please subscribe. We'll send you notifications. I think you're going to be happy. Once again, I was in the institutional trading world for longer than I care to remember, and I'm older than I want to think I am. But my experience can be a way for you to learn in a lot quicker amount of a time than I did. Yeah, I mean, I've been studying this stuff for 20 years, and now I'm ready to teach it. All right, everybody, that's it. Hope you have a nice weekend. I will talk to you soon.